you can do something about greening your pension or moving your money from traditional investing into more sustainable funds. Take that step one. Don't try and take steps 1, 2, 3, 4, and 5 all at once. Make sure it does something. And then let that positive spillover effect take hold. Let that guide you to something, to the next action and the next and the next.
This episode is sponsored by Saxo Markets. Hello and welcome to the Investing Insiders podcast, where we help you achieve financial well-being by making smarter money decisions. I'm Brianne, and in today's episode, we'll be taking a look at how you can generate a return on your money while making a positive impact on the climate and environment. Joining me today is Jack Chellman, CEO of the Global Returns Project. Jack, welcome to the show.
Thanks, Brianne. Really happy to be here.
Amazing. I mean, the Global Returns Project is such a unique organization, and I think it would be great to get a little bit more background into what you guys do, where you started, and I guess what's on the radar at the moment.
Fantastic. Well, would love to. So just sort of whistle-stop tour of what we're trying to do. We are a UK charity, the Global Returns Project, and at the most basic level, we're trying to make it as easy as possible for anybody, any individual, and any business to give to the best climate and nature charities in the world. Now, why are we doing that? Well, because climate and nature charities do really important work, but they don't get very much funding. Less than 2% of philanthropy goes to climate mitigation globally. So really, really small slice of the pie. But when we think about things that we can do as individuals or as corporates for the planet, this is one of the most effective things we can do, is give money to the charities, the nonprofits, the organizations with the skills and strategies to deliver real impact at scale. So that's why we do what we do. The way it works really simply, one of our co-founders is a former fund manager. So that's why it fits really well into conversations about investing. We take what we call a sort of portfolio approach to charitable giving in this space. So we've got a portfolio of climate and nature charities that we select and assess. They are best in class according to a proprietary methodology for finding and assessing those organizations that we've put together. We've got an amazing team of climate and nature experts who sit on our due diligence committee, who oversee that methodology and selection of the charities. And to the best of our ability, we've tried to apply some of the basic principles of good investing to the world of climate philanthropy. So the portfolio is diversified compared to most philanthropy or charitable giving you might do. It's not just rainforests, it's not just oceans, but it's also environmental law, regenerative agriculture, data, and on and on. Just like with your investing, we try to do the hard work for you, to do the research, to find the best organizations, to get that portfolio so that the organizations we can be really proud of. And then every 6 months, we rescore the organizations according to our original methodology. We produce great impact reports for every donor. And if a charity started to underperform according to our metrics, we would remove and replace them. So you've got that curation element as well. And the way it works is really simple. Anybody gives to us, the Global Returns Project, we distribute 100% to the charities that they want to support. That's really unusual. We don't take any fees. We actually absorb any transaction costs, and then you get those great reports. So it's all about making it easy and helping people know how to do the most good possible with their money when it comes to climate and nature.
I think that's such a really valuable breakdown. And especially in today's age, we are seeing a lot more appetite for people looking to make real impact with their money and try to drive change in alignment with their values and the things they want to see happen in the world. I think what would be amazing to dig into a little bit more is the bridge between sort of donating, impact investing, and traditional investing. What kind of themes do you see bridging those things together in helping people make better decisions with their money?
Absolutely. Well, one of the reasons we focus on climate philanthropy as a part of investing decisions is because it fits really well into a conversation about the spectrum of capital. And of course, most investors are going to be familiar with this idea of a spectrum of capital going from sort of traditional investing all the way through to, ESG funds, impact investing, and maybe a mention of philanthropy on the far other end. We think that's really important because the fact is, when it comes to the planet, there are lots of things that interesting market mechanisms can do. We can sort of fuel the green economy. We can divert funding away from practices that harm our planet, like fossil fuels. But there are a lot of things that we need to do for the planet that just can't deliver a financial return as much as we might want them to do. So take, training environmental lawyers around the world to enforce environmental law and produce new environmental legislation. That's what one of the charities that we support does. It's critically important. It's system change, but it's really hard to make money from it, right? It just wouldn't fit into an investment fund. And the same goes for a lot of ocean conservation, a lot of really important systems change around rainforest protection, regenerative agriculture, and so on. So there are a lot of things we've got to do for the planet that don't deliver a financial return. That's what charitable giving or philanthropy does really well. And that's why it fits into that spectrum in a special way. And what we like to say, our sort of classification for these things, is your traditional investing, unfortunately, often can be classified as degenerative, in that a lot of traditional investing, unfortunately, funds activities that are actively harmful for the planet. What we want to do, of course, and what I think a lot of people are interested in transitioning to, is get to a more sustainable investing norm. And for us, that's generative because it delivers financial returns while avoiding harm on the planet. And that's really what it does well, avoiding harm. But what we're trying to add to the conversation is not just avoiding degenerative, not just being generative, but being regenerative. So actively regenerating the planet and transforming our systems to get to a more stable equilibrium with our planet. That's how we talk about climate philanthropy. Philanthropy is an old word for something that is newly relevant today when we think about our investing, because that's a great way to give back directly to our ecosystems and our biosphere.
Absolutely. And for us, I think one of our most sort of viewed pages is our ethical investing offering and breaking down what the different options are for people looking to have a more generative or play a more generative role when it comes to investing and what their money does. So I think that's been a very helpful breakdown just to kind of bring things together. Are there any common misconceptions that you've heard of people just kind of talking about, or anything that's come up when it comes to impact and investing and philanthropy? What are some of the things that, potentially are myths that people hold that might hold them back from going down this path?
I think there are some myths that hold people back when they think about impact. I mean, one is that point about what can deliver returns. And I think we talk with a lot of people who, when their access point to these conversations are conversations with wealth planners or financial advisors or things like that. And often the conversation is only about mechanisms that deliver returns while trying to do something good. And I think part of the conversation is about getting philanthropy on the table and helping people feel comfortable. I think another misconception is that charitable giving or philanthropy needs to be approached in the same way that you've always done, that your family's always done, that it can't be innovated. And if you take that approach, then it really feels like it doesn't fit into conversations about asset allocation. But if you approach it in a new way, well, that really opens up the door to interesting things. So we think about climate philanthropy as a really pure and fast form of positive impact for the planet. That's because we approach it a little bit differently. We focus on diversification, so tackling a multifaceted issue like climate with a multifaceted set of solutions. We think about it with rigor and understanding that results matter in the same way that you would when you think about your investing. So we do our hard-nosed, research and selection for the charities. We do those 6 monthly reassessments and reporting. And so I think the overall idea is people think that philanthropy can't be approached like you would with your investing. But actually, if you value results and research and rigor in your investing, you can apply those same principles to charitable giving in a real way.
Definitely. I think that really does help cement those two things together. What would be interesting to hear and dig into a little bit is when you're thinking about philanthropy and impact investing, particularly when profit isn't necessarily the goal, what are the metrics people can look at to measure whether or not they're having their desired impact through what they're giving?
It's such an important question because often in a sort of standard way that people go about their charitable giving, people give money away and then kind of cross their fingers and hope for the best, right? Maybe charities do a good job with their impact reporting, but maybe not. And if they don't, then you're sort of, that's it. You don't really know what to do. So I think there are a few things. I think when we think about impact and we think about what charities are doing, we look at 4 key categories that are part of our methodology that might be illustrative for other people for how you might approach charitable giving. So the first is a broad category, but impact. So what are the charities doing? How are their activities measured in the long term? What are their broad goals? How are they living up to that? And how are they delivering on whatever your key objectives are? So for us, our portfolio focuses on climate action, life below water, and life on land as our key 3 SDGs that we focus on. So impact, we also look at the scalability of what the charities are doing. So we want the efficacy of their organization to increase as the amount of funding they get increases. We'd like them to be able to absorb large amounts of funding right away. So we don't want them to be overwhelmed by a donation that feels too much for their systems. We look at the networks that charities form with other NGOs, with governments, with local communities or indigenous communities. That for us is really, really important because a charity on its own is just one data point. But if it's working and collaborating in coalition with lots of other organizations, that's when things can really change in an exciting way. And then the 4th category we look at is co-benefits. So how are the organizations delivering impact, not just on the core objectives that we're looking at, climate action, life below water, and life on land, but also any of the other sustainable development goals that are so important. So how can these charities be delivering on human rights or health or women's rights or all the other things that are critical? So thinking about them as part of that broader ecosystem of impact. That's how we approach things. And I think it's helpful to think about that as well. The last thing I'd say is we care a lot about expertise. And that's something I think anybody who's thinking about charitable giving can take more seriously is what does the science say about this stuff? That's why we've got an amazing team of scientists and experts who work with us because they're on the front lines of these issues. They know what works and what doesn't work. And I think thinking about that area, that expertise that's involved in finding the right charity can be really helpful.
It's quite interesting to sort of hear the parallels between what would be sort of the deep fund analysis and how things work in terms of vetting and doing due diligence on the charities. There are so many parallels there. I think one thing that does come up, especially when it comes to people looking to have impact and drive change in whether it be the climate or through social issues and things like that, is the concept of what you're looking at might not necessarily be how things operate. So the sort of catch-all term is greenwashing, where potentially people or organizations use buzzwords or things like that to make their impact seem better than it is. When it comes to kind of vetting charities and that whole process, I know you kind of mentioned the framework that you have in place at the moment. What other things can people do to sort of make sure that what they are trying to drive impact with is actually going to happen because, the organization is able to fulfill that?
Well, it's an interesting one. I think first, it's important to think about the kind of organization you're looking for and the kind of networks that they have based on the goal that you're trying to achieve. So as an example, we think about climate and nature, the crises of biodiversity loss, climate change. A lot of people care about those things, But when they look at charitable giving, they often only look at one kind of organization. So on the one side, they might look only at the biggest, largest name brand charities, groups that they've probably seen in the news for many, many years. They're the best funded organizations. They've got the best ad campaigns. Those are probably very good charities. There's nothing wrong with that kind of charity. But if it's that well known, if it's got that big a brand, maybe your donation is not going to go as far in terms of delivering impact. On the other side, a lot of people look at charities that are as close to home as possible. So they'll do a river cleanup near them, or they'll support a local conservation initiative, which is fantastic. The importance of small local charities is really, really big. But again, sort of getting back, what is your goal in charitable giving? If you are giving because you've just read the news and seen that wildfires around the world are getting worse, or storms are getting worse, or you're looking at crop failures, or all the other global challenges that climate change presents, then only taking action in a local context may not be the only thing that you should be doing, right? Because you're only going to have an impact in that local context, or in your country, or in your city, or whatever. So I think it's important to say, what am I trying to achieve? If in terms of climate, you're trying to say, well, I'd like to have the biggest impact I can as an individual on a global issue, then that's going to direct the kind of organization you're looking for. So for us, that is what we're trying to do, is how to help people have the biggest impact as individuals for something global. So we look at charities that are kind of in the middle of that spectrum that I've just laid out. So they're not so small or so local or so new that the impact is limited in terms of a global scale. They're not so big and so global and so well known that they're overfunded, quote unquote. We look at ones in the middle, groups that are still innovating, still pushing the envelope, that can really turn even relatively small amounts of money into real impact. But they've got those global networks. They're operating in the high leverage points around the world that we know we've got to get to deal with this issue. So, they're operating in the Amazon, or the Pantanal, or Sub-Saharan Africa, or Indonesia, all these places. So that's one example of what we think about. But I think again, it gets back to pushing ourselves to think about charitable giving in a slightly different way, with a slightly more strategic mindset to achieve the goals that we actually want to achieve.
Absolutely. I think the sort of weaving in of a clear strategy does help to anchor whatever comes next, and possibly helps give people a little bit more clarity around, this is what I'm trying to achieve, this is what I'm putting in, and bridge the gap that way. With the people that come to you to kind of look for the ability to invest in these charities, how much advice or how granular does the advice get? Are they able to have one-to-one consultations? How does it work?
Yeah, what we've tried to do is create a pretty flexible model. So the way it works in the most basic way, a lot of people are looking for something that has an impact and that takes as little of their time as possible, right? They're overwhelmed, they're stressed about the issue they're trying to achieve, and they don't have the time to find a big group of charities or research it. So, a standard donation to us gets split equally between the 6 charities that we support, and we report back and do all the hard work for people. But if somebody comes to us and they say, well, actually, I just want to support one of the charities or a few of them, or actually, I really care about this particular region or subject area, we're very happy to put together more bespoke proposals. Often that's for slightly larger gifts, but there's no minimum donation. That's another thing that we've tried to really focus on, is the fact that there's probably a lot of help out there for billionaires who are trying to give away money. That's often where we think about philanthropy being most relevant. But all of us can give money to good causes. If it's £100,000 a year, if it's £10,000 a year, if it's £100 a month. So we've tried to create a model that works for anybody, and we do work with anybody. So that's a slight way. And the other thing that we've tried to do is help people get something extra from working with us without losing anything. So often when people give, they want to meet the underlying charities. They want to go to their events or get their reports directly as well. And we've created a process that works with that as well. So if somebody comes to us and they say, I'd really like to give to these charities, I want to give through you. So you get the reporting and the assessment, but also get introduced to those charities for their events and newsletters and all the niceties. We can do that. So we facilitate those introductions as well. So again, it's all about trying to meet people where they are and provide something that's additive, but that doesn't get in the way of anything.
Yeah, I think that's incredibly helpful, because one of the things that does come up a lot, particularly on the investing side, is the idea of analysis paralysis. So there are so many options, there are so many things to consider that by the time you've maybe got all the information you need, you just don't know what to do or where to go. So I think having that support really does help people take the first step in the direction that they're hoping. I think one of the other things that does come up when it comes to investing is the idea of risk and what that could mean for your strategy, thinking about your risk appetite, thinking about if that's going to help your investment portfolio, that type of thing. Is that something that is woven into the system at the Global Returns Project? Is risk something that you consider, and how does it kind of bed in to what you do?
Absolutely. We take risk really seriously in two ways, I think, most significantly. The first is risk for the donor. And by that, I mean, is the donation going to be used effectively by the underlying charity in an appropriate and secure way? And is it not going to be mishandled by the organization? That's where the peace of mind element comes back, because the nice thing about having a really rigorous methodology, a long due diligence process for the charities that we admit to our portfolio, that 6 monthly rescoring and reassessment process, is we're really focused on making sure the charities are still doing what they say on the tin, that they're well governed, et cetera. And when we're bringing a charity into the portfolio, the risk of the quote unquote risk of what they're doing is something we take very seriously. So we put charities through a basic set of governance and sizing gates. Again, we're looking for charities that are a certain size, age, income threshold, such that a donor doesn't need to worry that they're going to disappear tomorrow. They've got a track record that's effective. They're well governed, things like that. And that's what the 6 monthly assessments do too. So that's the first element of risk, is making sure that the charities are just well governed enough that people can feel comfortable with them. But the other element of risk, again, gets back to that point of, am I going to achieve the objectives that I want to achieve? Is there a risk that I take this action and it doesn't really do what I was hoping it would do? When it comes to climate and nature, we think a big risk has to do with speed of action. So you can take lots of good climate actions and they're probably important, but unless you're thinking about what the science tells us, which is that we've got, quote, a rapidly closing window of opportunity in which to act on these things. That's the IPCC that says that, and that we've got really until 2030 to do as much as we possibly can on this issue. If you're not thinking about those things, then there's a real risk that your actions are not going to align with your real objectives. So we take that timing element very seriously. That's part of why we assess every 6 months, because we want to make sure that impact is being delivered regularly, that it's not just promises made, but promises being kept. And that's also why we look at global organizations. Again, there's nothing against small local charities. We've got to be supporting that kind of organization as well. But when it comes to climate and nature, if we are not getting money as fast as we can to as wide an array of critical ecosystems as possible, we're just not going to act fast enough before 2030.
This episode of the Investing Insiders podcast is sponsored by Saxo Markets. Saxo provides access to a broad range of global assets through a sophisticated trading platform. You can trade US stocks from as little as $1 per trade and UK stocks from $3 per trade. Please remember that all investing involves risk. the value of your investments can go down as well as up, and you could get back less than you invest. Terms and conditions apply. Visit Saxo Markets to learn more. Having a timeliness about these types of things is at the forefront of a lot of people's minds. I think something that would be interesting to touch on is, I know thinking about moving and mobilizing and financing organizations that can deliver these changes is really important. I guess one thing that a lot of investors particularly might have at the back of their mind, is there a way to do this and to also bring in the element of generating a return? So I guess moving one step away from philanthropy and maybe look at more the side of impact investing. For people thinking about that, do you have any sort of options or things that you kind of do yourself personally or through the organization which marry the two together at all?
Totally. And that's a great segue, because that's a key goal of what we're trying to do, is not just think about charitable giving in isolation for people who are already doing that, but really to talk to people who are investors, savers and investors who either are doing that individually or working through an institution, working with their financial advisor or their wealth manager. That's where a lot of people make the most important decisions about their money, right? In conversation with their family and maybe their wealth advisors. So those are the conversations we really want to get into. I'm not an expert on impact investing. All I can say is it is a really important thing to have on the menu. It's not for everyone, but what we want to make sure we do as a whole is avoid harm in those sort of standard investment decisions that are trying to deliver a return. And we would love as many people as possible to take impact investing seriously. We want that on the menu as much as we can. What I think we think even more frequently about is how charitable giving can be a part of those asset allocation conversations in a way that doesn't feel strange or unusual. So we work a lot with wealth advisors who talk to their clients about charitable giving as a part of that spectrum of capital for the planet. There's also an element of how you approach this that can make it feel more natural as part of those conversations. So if you're thinking about how you deploy your capital and you're saying, well, let me get out of this fund that I know is investing in companies that are doing harm, that's great. If you're thinking about moving some money into funds that are actively trying to do something good through impact, even better. And then a nice way to think about this is proportional to your wealth. So instead of treating charitable giving as you would normally do and saying, well, let me set up a direct debit for £10 a month, or let me think about this as a flat amount every year that kind of never changes. That's not how people think about their investments, right? People think about things proportionally and in a percentage way. And that's what we're trying to get normal as well. So a recommendation that we have is, if you're starting out and you're looking at the impact of your wealth, how you're trying to do something good for the planet, you might think about giving between 0.25% and 0.5% of your savings and investments every year to charities that are actively regenerating the planet. That, for a lot of people, somewhere in that spectrum, 0.25 to 5%, 0.5%, that's probably not something they're going to feel on an annual basis. It's not going to feel like a real struggle to allocate that to charity. But for a lot of people, that would be a substantial amount for the charities. And if everybody did that, law of large numbers, that would change the game for how these charities are funded. And that would move the needle on that 2% figure that I mentioned in terms of global funds going to climate philanthropy. So probably not as focused on impact investing as you're asking, Brian, but hopefully that incorporates some of this philanthropy into the asset allocation world.
I think that's a very helpful breakdown from, I guess, the investing point of view. There is that idea of proportionality, and it's not about necessarily throwing everything in at one point. It's about thinking holistically, what can you afford in certain areas and balancing it in that way. One thing that I think would be quite interesting is Looking at the sort of asset allocation, thinking about your philanthropic sort of donations and everything is a basket of goods, how important is it to bridge your other financial decisions on that? So, for example, should you be thinking about the type of bank that you use? Do they the kind of impact that they're having? How important is it to kind of feed those decisions into the wider discussion about making an impact with your money?
It's hugely important. I mean, we've all got to do as much as we possibly can as soon as we can. And you're right, Brian, to talk about these other financial decisions that we can make, because again, often those are some of the most effective things we can do. So there's some great resources out there that let you look at how your bank is judged in terms of its green credentials or lack thereof. Take a look at that. There's a lot of work out there about your pension schemes, and changing the way you think about your pension is a really important part, because that money is doing something, whether you want it to do something good or not, it's having an impact on the planet. We think about this stuff in a couple different ways. One thing is, one motivator for why we set up the Global Returns Project in the first place is, if you do a Google search for what can I do about climate change, you get a long list of actions which are all really important. And many of them have that sort of financial component to them, because we know that the way we move our wealth has an impact on the planet. But something that's not often on those lists is charitable giving. And that's kind of unusual. So we've done some internal research over the past few years to compare the effectiveness of giving to high impact climate charities with the effectiveness in terms of CO2 sequestered or avoided of some of the most common lifestyle choices that individuals can make in terms of sustainability. So going vegan, flying less frequently, buying an electric car, taking one fewer long haul flight a year, things like that. Again, we need to be doing all those things. It's really important. We can't miss out on those things. But when we've done our internal research, we found that actually giving money to good charities is the most effective thing for most people to do on climate by far in terms of CO2 sequestered or avoided. Because when you give money to good charities, it's essentially giving them the power to leverage their skills and strategies and networks to have that high impact. So one thing we're very interested in is making sure charitable giving is on the list of on the things that people think about. We've got a behavioral scientist on our advisory board, and one thing she's helped us think a lot about is this idea of positive spillover effect, which is the idea that if you take one action on climate and you know that it had an impact, a positive impact, you're a lot more likely to take another and another and another after that. So that's another thing we're very interested in, is if somebody starts with, for example, charitable giving, and they know that it does something good, does that give them more confidence and more joy in taking other important actions, questioning their other investments, questioning their pension, their bank, etc.? That's where we start with a lot of those things.
I think that's so interesting, particularly around the behavioral psychology of it all, because one thing that has been quite interesting to kind of tap into is the relationship between our emotions, our thoughts, our habits, and our actions when it comes to money. What bridge have you seen with that when it comes to philanthropic giving and sort of impact investing and things like that? How much does somebody's psychology drive their actions to take those steps?
It drives it to a huge extent, Brianne. It's funny. One of the original reasons that we set up the Global Returns Project the way we did is to try and bring more head into a space that has a lot of heart, right? Charitable giving is all about emotion. It's the things we care most about. That's wonderful. But, when we tackle things like our investments, we use our heads a lot. We use rigor and research and logic. We have tried to the best of our ability to create structures that enforce that sort of rationality and logic to questions of climate philanthropy. So that's the research, the methodology, the reporting, the team of experts. I think that's critically important. I think it's a reasonable next step for how to approach these things, especially for people like savers and investors who think that way about their other financial decisions. But we've also, over the years, found that we have to have the right balance between head and heart, because you can apply as much logic as you want to charitable giving. At the end of the day, human beings actually make a lot of decisions based on emotion. We act on intuition and we act on what feels right to us. So I think something we try to really walk a fine line between is that research and reporting, as well as the human stories and the narratives from these solutions that we're supporting that are so unbelievably compelling. I mean, one of the charities we support is Blue Marine Foundation, which is an incredible ocean conservation organization. They have, over the years, one of the things they did, along with some other NGOs, is work with the UK government to protect marine areas around UK overseas territories, which is a really interesting kind of leverage point that they identified as critically important. And in doing that, they've secured a commitment to protect 4.5 million square kilometers of the ocean just through this what they call the Blue Belt program, UK overseas territories. That's a story that is really inspiring. When you dig into the people involved in that, the people at Blue Marine who work on these things, it's something that's very, very emotive and pairs well with the logic of, Blue Marine making it through our methodology and going through our research and reporting as well. So we try to do both. We have a lot of community events that bring those charities into the picture, help people meet them, bring those stories to life. Another thing that comes to mind is we support an organization called Rainforest Trust, which helps protect threatened rainforest around the world, often by buying tracts of land and titling it to indigenous communities or local communities. They've done that with 50 million acres of rainforest, of threatened rainforest around the world. So huge number. Actually, it might even be more than that at this point. That's something they do a really good job at that we often send to our donors as well, is they will dig into the stories of the indigenous communities they work with when they protect that rainforest, because often they have a huge network of local and indigenous partners, and the endangered species that benefit. So we can think as quantitatively as we want about number of acres protected, tons of CO2 sequestered or avoided, but seeing the pangolins or the macaws or the orangutans that are benefited by this activity just at a human level often resonates in such a different way. So you have to do both. And we've tried to get the best of the heart in philanthropy while also having the head of sort of an investment management approach.
That really is fascinating. And I think it does marry the two together quite well to kind of have the emotive side, which inspires action, but then also the analytical side, which helps measure how well this is marrying with somebody's strategy. We slightly touched on this before, but I suppose thinking about the emotional side of what drives people to give in a philanthropic way or, partake in impact investing is when potentially there could be an imbalance in the use of emotive language or language which might cloud how well something actually stacks up against the claims that are being made. What are some of the red flags people can look out for if they've already sort of started on their philanthropic journey when it comes to climate change or something else? What are some of the red flags that they can look out for with other organizations or things that they might already be giving to help them, take a pause and think, okay, is this actually matching up with what I'm hoping to get out of giving to this organization?
A couple things come to mind. One is fees, what people are being charged. Now, when you're giving directly to a charity, there in the past has been a real skepticism about staff costs and sort of unrestricted funds versus project costs. There's been a shift in the sense on how to approach that question. And I think now philanthropy is really trying to be more sensitive to where staff costs are a natural accelerator of project momentum. And it's not always fair to draw a clear link between the two. But a lot of people, when they're trying to give well for philanthropy, are siphoned into systems that charge a lot of money. There's some great resources out there that are worth good money. The sort of ultra high net worth philanthropy teams that do tons of research and put these structures together cost a lot, but they're also sending money in effective ways. But I think what I would say for your sort of your normal saver and investor is you don't always need to settle for high fees on good advice on charitable giving. I mean, again, as an example, the Global Returns Project charges no fees, and we think that's really important. We fundraise our operating costs totally separately from trusts and foundations and some individuals. Not everything is going to be like that. Not everything is going to be free in the way that our model is. But I think that's something that people can look out for. And we've come across structures that take a good chunk of donations when they purportedly send them to good places. That's a red flag for me. The other one that comes to mind is any claims of a silver bullet solution. And I think that's probably the case in every sector that you might think about charitably, but it's especially true for the environment, for climate, for nature. Any solution that is saying that it's the only solution is maybe stepping a little too far, right? That we know that these issues are incredibly challenging, and the science tells us that we can't just do one thing to deal with it. Tree planting trees are wonderful. It's not the only thing that we need to do, and there's quite a lot under the hood in terms of what is effective tree planting. Should we be restoring degraded land in a more holistic way? Won't get into that, but trees are not the only solution. Rainforests are not the only solution. Oceans are not the only solution. We've got to do all the above. So the red flag is anybody claiming to be a silver bullet, but the thing to look for is where you can tackle lots of different things at once, I think.
Absolutely. I love the idea of thinking about it in a more holistic way. I think across the board, finances included, that idea that this one action is going to solve everything usually is, a cause for concern. Just to take a pause and think, is this true? Unlikely. So it's interesting to see how that kind of filters into the philanthropic space as well. I think what would be really helpful is to kind of if we go all the way back to the beginning, if somebody's feeling like they really want to make a difference with their money and have an impact, but they don't know where to start, what is the first step that they should take before kind of delving in?
I think they can first take an assessment of what they want to achieve, why they care about these things, what are their motivations? Are they motivated by their kids? Are they motivated by what they see in the news, by a love of animals that they've always had and an empathy for the plight of animal species around the world? What is it that's driving them to do something on this stuff? The second thing I would say is setting yourself up to be clear-eyed on impact. And I think the reason I say that is it's really easy to throw yourself into the world of, again, we're just taking sustainability as an example. It's really easy to throw yourself into the world of sustainability and just go from one thing to another and kind of go crazy because there's a lot of options out there for what we're being asked to do. Take that Google search of what can I do about climate? The lists are long, they're not always comprehensive, and it can feel overwhelming to be asked to do so many different things at once. Sometimes people just choose, well, let me stop doing this and take on this and sort of go at it a little bit randomly. If you take a step back and you say, let me take impact seriously in the way that when people are investing, they take returns seriously, financial returns seriously, that adds a bit of clarity to the process. Now, I obviously am going to say a great place for people to start is giving money away, because it's something that everybody can do at any level. Doesn't need to be millions, doesn't need to be hundreds of thousands. I think that's a great starting place. And in fact, one of the things we say about the Global Returns Project is you can start here. This is a step one for people on their sustainability journey. They see the impact, they get to know interesting causes, and they tackle things from a diversity of perspectives. However, you don't need to necessarily start with charitable giving. I would say choose something that, with that impact lens on, you feel really confident is going to make a difference. So have a conversation with your wealth advisor if they are knowledgeable on these things. If you can do something about greening your pension or moving your money from traditional investing into more sustainable funds, take that step one. Don't try and take steps 1, 2, 3, 4, and 5 all at once. Make sure it does something, and then let that positive spillover effect take hold. Let that guide you to something, to the next action and the next and the next. And again, don't be afraid of approaching these things the way you would do with anything else that you take seriously. Look for proven results. Don't just cross your fingers. Is there impact reporting? Am I seeing evidence that this made a difference? And if not, take that seriously and change the strategy. So that, I think, is a starting point for people taking impact seriously and choosing that first action that's going to lead to things that feel right to them.
Well, I think that's a really valuable roundup, and we'll be sure to make sure we link to all of the amazing things you're doing at the Global Returns Project in the show notes. Jack, thank you so much for joining us today. It's been an absolute pleasure to sort of speak to you and get a bit more understanding of how you can bridge these different things together to really drive impact with your money.
Thank you so much, Brian, and really a pleasure to talk about how philanthropy fits into those spectrum of capital conversations. Thank you so much.
Awesome. Well, yeah, I think we'll kind of wrap the episode there. Yeah, Jack, thank you so much. This has been such an interesting discussion, and I have kind of bookmarked a few things in mind as well, which I think we might do larger content pieces on. So, yeah, I think if you don't mind us reaching out again, maybe for like data or something like that, I think it would be amazing to kind of just, kind of work those two things together. Because one thing we've definitely seen is a huge appetite of people wanting to make a difference, but just don't know where to start. So, yeah,
well, thank you for the opportunity. And I hope the bridge we're trying to build between what you all probably normally talk about and what we do made sense. It's so important to bring these things into the same conversation when people are thinking about their wealth. So really appreciate the chance to be able to do it.
Thank you so much for joining our Investing Insiders podcast. If you like the episode, please subscribe and leave us a 5-star review on your platform of choice. For the latest money news and deals, you can sign up to our weekly newsletter at investinginsiders.co.uk/newsletter-page. We've also got a suite of guides, tools, and calculators on our website at investinginsiders.co.uk. You can also keep up to date with us on TikTok, Instagram, and YouTube. Thanks for joining us, and we'll catch you in the next episode.